Breaking news, this just in. Consumer price inflation is absolutely through the roof, the highest it's been in 4 decades, 40 years. And that is just the numbers that they're telling us, which means the real numbers are likely a lot higher. There's also potential bank runs in China. There's also a big problem with consumer credit card debt being the highest it's been in the US. And all of this has huge implications for rate increases later this month in the ECB in the US, and this will of course have a huge effect on the stock market and on the cryptocurrency market. So let's dive straight into this edition of the weekly news wrap up. If you are new to the channel, welcome. My name is Dirk. Subscribe to the channel down below if you haven't done so already. Click that notification bell. If you haven't joined my email list, it's the first link in the description down below. Click that. Get on my email list. I can notify you every time I upload a video or when there's an important update. And you can also follow on Instagram, Twitter, and join our free public Telegram. The links are in the description down below. Okay, so let's start with probably the biggest news of this past week, which is the CPI, which is the inflation data as they measure with the official numbers and the statistics. So I think everyone who really studies this is in agreement that the real numbers are actually a lot higher and that they use all sorts of smart strategies to be able to manipulate the index to make it look not as bad as it really is. But even with the official numbers of 8.6% consumer prices increase year over year, 8.6%, that means if you don't increase your income by at least 8.6%, you are actually getting poorer because the purchasing power of your money that you have, of your savings, is getting less and less at this rate of 8.6% a year, because we can all see it in the supermarkets. Just the prices of everything is going up. Gas, that obviously leads to increased transportation costs for pretty much everything, which means the prices of all those increased goods get passed on to the consumer, which means everything in life gets more expensive. So as you can see over here, the Wall Street Journal says the US consumer inflation in May reached its highest level in more than 4 decades as surging energy and food prices pushed prices higher. And this is obviously a huge problem for the average person, for the poorer people, the middle class people who are not increasing their wages. With 8.6% a year, everything is getting more expensive, meaning they're going to have to start cutting back more and more, budgeting more and more. And as things get more expensive, basically can't afford stuff, meaning they're trying to put stuff on credit cards, which we'll get to in a second, which means their debt levels are surging. And at some point, this is just going to create a huge, huge problem for the overall economy and for tens of millions or hundreds of millions of normal people that are just basically getting squeezed in a big way with higher prices and devaluing purchasing power of their fiat currencies. So this is really a big problem, and we're going to have to see how that ends up unfolding. Of course, there's also a lot of other problems because of this high inflation. Well, the central bank tends to want to raise rates to combat the inflation, meaning that they're just going to raise the rates. But if they raise the rates, it's going to be bad for all the debt that is already outstanding, meaning usually what happens when rates get raised is that it is followed by a recession and a stock market crash, or maybe even a general larger crash of the stock markets and the housing market. So we have the ECB, the European Central Bank, confirming that it intends to raise its key interest rates by 25 basis points in July. We of course also have the FMOC, which is the Federal Open Market Committee, that is going to give the Federal Reserve rate hike in June. That is happening on the 14th or the 15th of June. I think both days. The decision I think comes on the 15th. And because of this high inflation, this record high inflation, the expectation is potentially that we are looking at a 0.75% basis point hike, which would be very aggressive. Hence the reason that the stock market sold off in a big way on Friday. Cryptocurrency markets are down, of course, over the weekend also following that. So there is a lot of fear and panic in the markets right now. Then we have Jennifer Zhang here saying that all banks in Shanghai have restricted depositors from withdrawing money. So remember the videos about banks having no money to all withdrawing the Henan province? Well, a bank run is about to sweep. I don't know the authenticity of this or what is happening there, but you know, this is something that has happened in history before in different countries. Go back and look what has happened in Venezuela and Argentina multiple times. Seems to be happening in China more and more and more. What happens if your bank just says, sorry, you can't withdraw your own money anymore? You know, that's a big issue. And then you can go and look into bail-in laws, where in cases of emergency, there are certain rules in place that allow powers that be to actually seize or confiscate part of depositor savings. And this has happened before in Cyprus in 2008 or 2009. I believe they took 25% of depositor savings. So you might want to look into that too. And that is actually a really, really good marketing campaign really for Bitcoin. Because what is Bitcoin? Well, it is decentralized money. It can't be censored, can't be frozen, can't be confiscated. So if this starts happening more and more on larger scales, where banks start restricting depositor withdrawals, or maybe even bail-ins start happening, a lot of people are going to be like, hey, my money's not safe in a bank anymore, or I want to at least safeguard some of my purchasing power that nobody can confiscate. I'm going to put it in Bitcoin. What happens if tens of millions or hundreds of millions of people all come to that same conclusion and all start buying some Bitcoin with a percentage of their savings? What do you think that's going to do to the price of Bitcoin once that all starts happening? This is a very real scenario that is happening right now. It's not some theoretical thing. Then we have Peter Schiff, who's saying credit card debt soared by $17.8 billion in April, the second highest amount ever. The highest was in March when it soared by a staggering $25.6 billion. Consumers are completely tapped out. They're using their credit cards to buy food and pay for other essentials. Hashtag stagflation. So you can see what is happening here. Things are getting more expensive. Wages aren't increasing. Maybe the people have even lost their jobs because of all the lockdowns and the whole health crisis that's been going on for the last 2 years. Businesses have been shut down, all that kind of thing. And what are they doing? Well, what choice do they have? They have credit cards. So they're putting expenses more and more on credit cards until, of course, those are going to get maxed out at some point. And obviously, credit cards have incredibly high interest rates. So that's even going to compound even more. So what is going to happen when all of this at some point reaches a peak or reaches a ceiling? How is this going to restore and get better and come back to normal? That's something you need to ask yourself. And then you need to start finding out, well, what are you going to do if it plays out in certain ways? Then we have here Ben Rickard sharing in the last 200 years, 98% of all countries with a debt to GDP ratio of greater than 130% have defaulted via inflation, currency devaluation, restructuring, or pure default. Basically meaning if the debt gets so big it can't be repaid, so the only way to actually repay that debt is to hyperinflate the currency, making the debt in real terms a lot less. And obviously that is destroying the purchasing power of the fiat currency. So if you have any savings in that fiat currency and it gets massively devalued, well, it means, today $100,000 might buy you a nice Mercedes, and in a year from now or 2 years from now, that $100,000 might not even buy you a bicycle. There's plenty of examples of this, like Zimbabwe, Venezuela, where people are walking around with a wheelbarrow full of fiat currency cash to be able to just buy a chicken or something like that. That's obviously extreme, but look at what is happening right in front of our eyes. Okay, so moving over to more crypto-related news, the EU aims to clinch deal on landmark crypto law this month. So France, the EU Parliament, are optimistic about agreement on MiCA. Negotiators still split on a few areas such as NFTs. So basically, they're trying to come to an agreement on the key legislation to regulate cryptocurrencies. So let's see what ends up happening there. Regulation is coming whether we like it or not. And I actually do think that a certain amount of regulation is really good for the space, because there is just way too many scams, way too many fraudsters who are taking advantage of good people. And I would like to see that being washed out. And regulation is really a good way, in my opinion, to be able to at least filter out a large portion of the garbage and the trash and the scammers, and allow real projects and real coins and real cryptocurrencies to have a chance to really thrive and grow as they should be, in my opinion. Then another huge milestone is Ethereum's Robson proof of stake test merge goes live. So this has been something that's going on for years already, which is the transition of Ethereum from a proof of work consensus mechanism, just like Bitcoin, to a proof of stake blockchain that's obviously going to be much more energy efficient. There's obviously a lot of people who are more in favor of one or the other, but this is the process that's happening. And before the merge, they're calling it the merge, before it happens, where Ethereum fully switches over to proof of stake, it has to be done on various testnets, one step at a time, to be able to make that progress. And of course, this is a giant operation because Ethereum is a running blockchain. There are literally hundreds, probably thousands of applications built on top of it. It's being used every single day. All the NFTs that are running on Ethereum, everything is working. So they're basically taking a working platform, a working protocol, and trying to upgrade it as it's still being used. So hopefully everything goes smoothly, but there might be some unexpected things that can happen in this process, and there could be some wild surprises ahead of us in this process of the merge. When this is going to happen and when it's fully going to go to proof of stake, nobody knows. Again, it depends on how smoothly things go. It could take weeks, it could take months, maybe it takes more than that. But the proof of stake test merge has gone live. Then we have continued investment, again by funds, VCs. We have Huobi Global launching a $1 billion investment arm focused on DeFi and Web3. That's really the current theme over the last month. Billions and billions of dollars are being raised, invested. You can see here UFC and VeChain announced a $100 million sponsorship deal. I don't really know what the benefit of this is besides, getting it seen, but like VeChain spending $100 million, is that really the best way, the best use of that $100 million to get results for their blockchain? Who knows? But either way, this is what is happening over here. Then we have Felix Capital raising $600 million to boost Web 3.0 exposure. So tons and tons of money being raised. $1 billion by Huobi Global, $600 million here. And it just continues over and over. You can see here, latest crypto venture fund drums up $110 million for Web 3.0 startups. We have Solana Ventures sets up another $100 million fund for GameFi and DeFi in South Korea. Then we have BlockFi Valuation, which has sunk to $1 billion in latest funding round, but they raised another $350 million at a larger valuation of $3 billion in March last year. Then we have infrastructure still continuing to increase. So we have PayPal that is making good progress in being able to offer cryptocurrency. So they're converting their conditional virtual license to a full bit license, which basically means it allows users to withdraw crypto holdings to their own wallets. So that is a huge, huge step forward. Because originally when PayPal was offering cryptocurrency services, it seemed like it could only be an internal thing where you could never withdraw that Bitcoin or that Ethereum that you bought within your PayPal account. And that obviously defeats the whole purpose because, not your keys, not your coins. If it's not your Bitcoin in a wallet that you control, well, then it's not really your Bitcoin. So now that is changing. And if you can indeed transfer that Bitcoin and Ethereum from your PayPal account into a self-custody wallet, into your Trezor wallet, into a Ledger wallet, MetaMask, whatever kind of wallet that you want, that you control the keys for, well, that is a huge, huge step forward. And potentially a very big reason to start looking at, if you have funds in PayPal, or PayPal does make it easier, if the rates are competitive and all that kind of thing, and you can actually withdraw it, it's going to be a really good idea for PayPal, and it's probably going to lead to a lot more adoption than not having this feature. So there is a lot of crazy stuff that has been happening in the crypto markets. Obviously, the biggest news is all this macro news with the CPI data, the inflation being insanely high. Next week, we have the FOMC, so the interest rate decision by the Federal Reserve. There is a lot of fear, a lot of panic in the market right now. The stock market sold off in a big way on Friday, so it's weekend. Obviously, the stock markets are closed. It's going to be interesting to see what happens next week. Now, as I'm recording this, cryptocurrency markets have sold off in a big way. Bitcoin, Ethereum, even Ethereum has dropped, I think, below $1,500 at this point. It was just in the high 1500s the last time I looked at it. And we're going to see if we finally actually do get that capitulation. As I've been sharing, I will actually make a video about this tomorrow. We go into the charts, we look at the price action, how the weekly is closed. So make sure you are subscribed to the channel down below. Click the notification bell. Get on my email list so I can send you an email whenever I publish an important update. There's so much happening in these markets right now. Also, be sure to follow on Instagram and Twitter, and in our public free Telegram group. You get all those updates if you want to join. The links are in the description down below. So please, before I wrap this up, stay safe. Do not overextend. Do not use leverage when you don't know what you're doing. Do not invest more than you cannot afford to lose. Do not tilt. Do not, start betting bigger to be able to make back losses and create even bigger losses and create big financial problems for yourself. The markets are going to do what the markets are going to do. Eventually, this is going to bottom out. It's going to give a huge buying opportunity. And then at some point, again, we will get a bull run. So be sure to tune into tomorrow's video, because I will be sharing exactly what my thoughts are on the chart right now and what I think could end up playing out over the next week or so.